Welcome to What Not to Do, a leadership conversation that dives into the don'ts than the do's. I am your host, Shrutika, and we have Mr. Frederick Fisher, a living testament of integrity, insights, and leadership in the world of insurance coverage for businesses, especially professional liability. Fred has spent half a century for claim adjustments to founding his own brokerage company, ELM. He has been authoring books and manuals to mentoring thousands through speaking, teaching, and writing. But beyond his incredible resume, Fred is known for his wisdom, wit, and rare ability to make the complex ideas into simple. And yes, he also happens to be a phenomenal cook. So, Fred, I have been truly excited and learning about your journey from joy of spices to claims made insurance. I think you are one of world's, great assets. So thank you so much for joining us today.
Well, it's my pleasure to be here, and thank you for having me on your show. And I'm sorry that it's so early where you are today.
Yes, so Fred, let's rewind to the beginning of your career. You have seen the industry evolve dramatically, but what's one mistake you encountered early on that shaped your understanding of leadership?
Wow, there's so many. Which one do I choose? Sometimes you get so focused, you chose you sometime on what you're trying to accomplish that
Mhm.
you ignore the obvious that's right in front of you. And you brought up the Joys of Spice, which was a cookbook that I put together many, many, many years ago. I can't even look at the photograph anymore because I was like 24. 20, no, I think I was like 28. It was like, what am I looking at? Um, but the reason I did that book was I was trying to finance a move from a company that I was working for, and I needed to get out of there for a lot of different reasons. And they were making some decisions that I thought were highly suspect and unethical. And most of the clients by that point in time were companies and organizations that I had recruited. And
Mhm.
my partners at the time, I was a junior partner, were acting like, "Oh no, you never would have done that unless you had our name behind you." It's like, "Oh really?" This is a personal service business. It's not like Heinz ketchup, you know. And so, in order to raise some capital, I decided to write a cookbook, and I was going to do it mail order. And because back then there was no internet, and very few people even had a computer on their desk, if any. And this is like 1978 or nine. And so I decided I was going to write a cookbook and have it printed myself. I found a printer could do it, and dictated all the recipes, and then had somebody type it up. Got some graphics done on the cover, and produced these things. And I was going to mail order them for 15.95 plus tax and handling, the usual thing.
Mhm.
And I took out a 1/3 of a page column ad in a major cooking magazine, but I only wanted the West Coast edition. Well, because the way the ad was laid out, there was no room in the West Coast edition to take up a column like that. So they put me in the
Mhm.
national edition at no additional cost. And I committed to like 5 months or 6 months, whatever it was. And so in essence, I was getting money from people in advance, and then I would send in this cookbook and made fair amount of money. So I figured I was capitalizing the company that I wanted to create. But let's talk about the company I was going to create. We were malpractice claim adjusters. You know what a claim adjuster is? It's when you have insurance and you have a claim, they send somebody out to investigate the facts, or maybe you're being sued by somebody. So a claim adjuster goes out and investigates the facts and gathers whatever evidence, and maybe they can settle the claim. And then, if they can't,
Mhm.
well, then it gets turned over to lawyers. In addition, we
Mhm.
also were what's called third-party claim administrators. So we were acting
Mhm.
like, with some of our clients, we were acting like we were the claim department because we had settlement authority up to a certain level,
Mhm.
and we could make coverage decisions and what have you. So
Mhm.
the model of that was An insurance company hires you, tells you, here's the case, here are the people you need to contact, and then you do the work. Then you send out and then you have to dictate a report, and then you have to send that
Mm-hmm.
report to the insurance company, and you might send an interim invoice at that point in time. So you're hired, you do the work, you send out an invoice. So that's about a 30-day cycle. It may take the insurance company 30 to 60 days to pay you.
Mm-hmm.
And so you got to be capitalized to be able to 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 handle that because you're not going to
Right.
be standing on your own 2 feet right away. And meanwhile,
Right.
you may have to hire employees and more equipment and whatever. So that takes some
Right.
capital, which is why I wanted to write the book. But compare the
Mm.
models. Here I was writing a book so I could do the work and get paid in 60 to 90 days. Meanwhile, these people are paying me in advance. Think about that. And the
So,
timing, if the timing could have been great, I could have started mail ordering not only the cookbook, I could have been mail ordering the spices. I could have been mail ordering cookware. I could have been the Lillian Vernon of the mail order catalog in cooking. And I was
right.
like, what was I thinking? So there's a good story where I was so focused on what I wanted to accomplish that I ignored the obvious right there.
Right. Right. Yeah. So even while you were getting maybe comparatively good chunk of income from there, you kind of like focused on what you
Oh,
actually wanted to do.
I made $35,000 like that. I
Oh.
thought, gee, we're capitalized. Let's shut it down. It's like, are you kidding me? It's like I should have kept it rolling. Oh my God. Anyways, there's a mistake. And there
Mm,
have been so many others over time. And I really have no grounds to complain. I mean, I love the malpractice and professional liability industry.
mhm,
And I accomplished a lot in the years in which we were acting as a claims organization, but the model changed, and so I decided to open up a wholesale insurance brokerage because I had
mhm,
a lot of knowledge, and I knew this is a trademark phrase, but we got a trademark application on it. But we call it the gotchas that'll get you. The type of policies we're selling, are number one, they're written on what's called a claims made basis, as opposed to an
mhm,
occurrence basis, which means
mhm,
like when you're driving your car and you have an accident and you think, oh my God, thank goodness my insurance just renewed. I'm covered. But when you're insuring architects and engineers, or when you're insuring accountants, when you're insuring lawyers and insurance producers and real estate brokers, they may commit an error, but no one's immediately
mhm,
injured.
mhm,
No one's immediately injured, unlike running a red light where somebody's immediately injured. So sometimes you make a mistake and nothing's going to happen for maybe a couple of years or more. So
mhm,
to deal with that from an actuarial standpoint, is very difficult because you don't know if you can't close the books on the policy because it's still,
mhm.
there may be something out there you don't know about.
Right.
So they created this thing called a claims made insurance policy, which covers you not when you committed the error, but when somebody makes a claim against you because of that error. That's a
Mm,
whole different story. But the policy is only 1 year.
right.
So if no claims were made against you in the year and you come up with expiration, of course you have to renew it. But now that policy year is closed. And in theory, it
Right.
doesn't always work out this way, but in theory, there isn't going to be any more claims against you during that policy term. And it
Okay.
gets really complicated after that. I mean, really
Right.
complicated, which is where the gotchas that'll get you come around. Because believe me, they got so many ways in these policies to be able to deny coverage and say we don't cover this, and some of it
Mhm.
is very, 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 very subtle. And
Right.
so I always felt, I was trained as a claim person. If I'd read one over a 25-year period, I'd read thousands of policies. I know
Mm,
where the gotchas are. I know where the
right.
gaps are. And
Mm,
and I can tell you that today's policies are even worse. And I'm all about providing financial security. If I'm selling
Mm,
somebody, even as a claim person, I was there. I was there to help them, hopefully. And I didn't mind denying coverage if there was a reason to legitimately do it.
mm,
But I wasn't looking to deny coverage. I was looking to get the file closed.
mm,
Investigate. If there's a problem, let's see if we can arrive at a settlement. I wasn't looking to deny
mm,
coverage, but I wasn't afraid of doing it if it was warranted. And so, as a broker, when I shut down the claim company in 1995, um, I opened up a wholesale insurance brokerage, meaning I wasn't
mhm,
dealing with the consumer; I was dealing with your insurance agent or broker, and he'd come to me to access markets and what have you. I knew where the policy language needed to be
right.
corrected. I was so, in
Mm,
other words, our tagline, our email tagline was, "We provide financial security. We let our competitors sell you some insurance."
mm,
And we took off like wildfire. It was very successful. And I guess they made up for not becoming the Lillian Verdon in cookware, but but we also developed a lot of software of our own and what have you, because we had some special needs and we were very technologically advanced,
mhm,
way ahead of our competitors for at least 5 or 6 years, and eventually everybody caught up. But we developed some very sophisticated software and came
okay.
really close to getting a patent. I mean, really close. And that would have been a whole
Mhm,
different story then. But that's what we did, and trained a lot of people. My employees
mm,
were always in high demand because they were so well trained. And we were, like I said, we were out to provide financial security. And by
right.
nature, I'm a problem solver. I see a problem. Usually, the solution is staring you in the face,
Right.
and we fixed them. We fixed them.
Mm,
We were fixers, and we had that
mhm.
reputation. So I'm very happy about that. So I guess
Okay.
that's the big thing. What did it teach me? Don't ignore the obvious.
Right. Yes. So Fred, picking up from the gotchas that'll get you. That's I think you have spent a lifetime educating others about gotchas that'll get you. So I want to ask you, especially a question for industry leaders. What are some of the blind spots that leaders, even seasoned leaders, still tend to overlook in the insurance industry?
Most people take insurance for granted.
Okay.
Even
Mm-hmm.
sophisticated buyers and sophisticated companies and risk management departments, they sometimes take it for granted as a necessary evil, and you need to spend the time on it. Number
Mm-hmm.
one, don't never buy on price. Never, ever, ever, ever buy on price, because the question then
Mm-hmm.
becomes, what am I giving up?
Mm.
That's
Right.
number one. Number two,
Mm.
work with an insurance broker and demand they work with you. And
Mm.
some of these, you'd be surprised how many brokers advertise how we're going to meet with you and we're going to custom tailor to your, we're going to just identify all your needs and we're going to custom tailor coverage for you.
Mm.
And then they go out and buy a
Mm-hmm.
standard form. They don't get asked for any qualifying differing endorsements. They don't even read the policy they're selling. In other words, what they're saying
Right.
on their website is all a bunch of hooey. It's a
Mm.
lie. Oh, we don't do that.
Right.
We don't do that. Well, you're telling your
Mm.
clients you're going to.
Mm-hmm.
You got to spend the time. And both the buyer and the seller, the insurance broker, have to do that, because these policies today are so tricky, and it's intentional. There are actual lawyers that have published articles about how you need to hire competent counsel to help insurance companies, or insurance companies have to hire competent counsel to help them draft policies so they could avoid paying claims. I mean, I've got
Mm.
many articles like that. I mean, nuts.
Mm.
But to me, what's happening in the industry over the last 20 years is that insurance is being seen as a commodity, like it's toothpaste.
Mm.
And it's
Right.
not. It's not. And I'll give you a good
Mm.
example of it. This case is one that I still can't get my head around. But as you may know, when you're a major corporation, you are going to be self-insured for maybe the five or 10 million. It's like a deductible. Okay. It's like your car deductible, $250 deductible. This is more like 5 million or 10 million.
Right.
And then you buy excess layers that could be in 10,
Mm.
20, or $30 million increments, and you're going to be in the stratosphere. And can you
Mm-hmm.
imagine the kind of insurance that General Motors buys, that sort of thing. Um, so Pharmacia Corp is a major pharmaceutical company. They're selling
Mm-hmm.
pharmaceutical products all over the world. They're a huge multi-billion-dollar company. So no doubt that they buy towers of liability insurance. And when you're self-insured, you're kind of controlling the litigation, but you also got to notify all your excess insurers that this claim is going on. And before
Mm-hmm.
you can even settle the case, you got to get their permission all the way up,
Mm.
all the way up.
Right.
So they entered into a $207 million settlement, which means they had to
Wow.
talk to all the insurance companies who were going to have to contribute to that because they had excess,
Mm-hmm.
their excess coverage. So they had to,
Right.
they had to get prior permission to do this, and they got it. There's no problem there. They entered into this
Mm-hmm.
$207 million settlement. It turns out that the insurance company who picked up excess of 160 million
Mm-hmm.
had a sentence in their policy, not an endorsement, mind you, but it's built into the policy contract itself, that had two parts to it. The first part was a condition that all of the underlying insurance companies below us had to have tendered their limits or had to exhaust their
Mm.
limits. In other words, there's got to be $160 million on the table right now. Otherwise, we're not paying. Got it?
Mm.
Okay. It was the second half of that sentence that just like, what? And the
Mm.
second half of that sentence said, not only do all underlying insurers have to have exhausted their limits, but that all underlying insurers, not the policyholder, mind you, not Pharmacia, but all underlying insurers had to admit liability.
Mm.
No one admits liability when they're settling a case. They're paying out
Right.
a
Of
billion or
course.
$2 billion. How many times have you seen it? Oh, we're not admitting any liability. We're just moving on and getting it behind us.
Right.
Wow. So I mean, I still can't get over this. And so Pharmacia basically had to cover the difference between 160 million and 207 out of pocket. And that's
Mm.
in addition to the $5 or $10 million, deductible they had to begin with.
Mm.
That's some serious money. That's a gotcha that'll get you.
Right. Absolutely.
So the moral of the story is number one, you got to read the policy. But who, and more importantly, what good does that do you when you got 50 different states and amongst other foreign countries? Will they enforce this language or won't they? You don't know.
Mm.
You're going to hire
Right.
a lawyer to do that every year to review your insurance policies and do a 50-state review. More importantly, the broker who sold it, why didn't he catch that thing?
Right.
And there's
Absolutely.
your problem.
Right.
I'm a pretty busy guy with my own business right now. But I'm
Mm.
the only employee. Do you think
Right.
I got time to review all my insurance policies every year and double check all that stuff and see if there's any gotchas that'll get you in there? But that's the point. In 37 states in the United States, 37
Mm.
out of 50, they have
Mm.
what's called the order taker standard of care, which means that an insurance agent or broker doesn't have to give you any advice. Their
Mm.
job is to, you tell me what you want, and my job is to get it. And if I can't, I'll let you know. That's it. Now, they can
Right.
be held to a higher standard of care if they hold themselves out as experts, or they misrepresent coverage,
Mm.
or they agree to do a risk management review for an additional fee in addition to the commission they earn. Okay. Or, and in some states now they say, well, you've done business with these people for 10 years. So at that point,
Mm-hmm.
they could be held to a higher standard of care, which
Right.
means that in essence, your insurance broker has no more obligation to advise you or help you than your server at your favorite restaurant.
Right.
Got it?
Yes,
So
absolutely.
it's like, take the time, guys. Take the time. And more importantly, get a broker that'll do it. That's getting harder to do.
Yeah.
And the reason
Hmm.
being is with all the consolidations going on with small independent agencies, even medium or regional agents, they're all being acquired by the big boys, right? And
Right, right.
I can tell you with absolute certainty that the corporate attorneys representing the major brokerage houses are jamming it down the throats of their salespeople. Don't give any advice. We can't be held legally accountable. We can't be legally liable if you don't give any advice. Well,
Mm.
first of all, the only people benefiting from that are lawyers, because number one, you're going to get sued anyways.
Right.
Number two, most lawsuits settle. 80% of all lawsuits settle. So what have you gained? But if you gave the advice and document the advice, whether it's taken or not, if you've documented it, it's going to make it really hard for somebody to maintain a lawsuit against you. And number two, if they take your advice, you're not going to get sued at all.
Mm.
So what's better? Giving the advice and not getting sued or having a
Are
lawsuit?
getting.
Yeah, that's like
Yeah.
stupid. And to support that, I'm not going to mention names here, but one of the major brokerage houses that I'm talking about, they're publicly traded, which means that they have to
Okay.
file their financial statements with the Securities and Exchange Commission every quarter, every 90 days. And their 2023 financial statements showed they had $350 million in
Okay.
reserve, in reserve to
Mm-hmm.
either to defend malpractice cases against them and
Mm-hmm.
settle them. That's a heck of a
Okay.
lot of money. So how's the order
Yeah.
taker standard working out for you guys? Doesn't sound like it's working out very well to me. And more importantly, they're settling anyways.
Right.
And it's like, what are you accomplishing here? And as I've been telling a lot of brokers in lectures that I do, is the independent ones, I said, if you give the advice and take the time to really make sure you're providing financial security to your customer, you're going to beat those guys every time.
Right.
Every time. Because they're not going to worry about giving you the proper coverage. I mean,
Right.
I've even been hired on now. I do expert witness work now, and I've seen some of the work that these people do, and I'm just appalled. Like, how could they miss
Mm.
this? How could they miss that?
Missed that.
You know, I mean, I was an
Yes.
expert witness against a fairly good sized Los Angeles broker that got acquired by one of the big boys. And over the course of several years, they must have made 15 different errors.
Mm.
Just sloppy. And boy, did I have a field day with that in my deposition, because even though those errors weren't the ones we're dealing with today, it shows a pattern
Mm-hmm.
that they're not paying attention to detail. They're not doing their job. They're not living up to the promises and the representations they made about how they were going to custom tailor everything for you and spend the time and yada, yada, yada. They didn't do any of that.
Mm-hmm.
It's
Right.
like crazy.
Mm.
Unbelievable. So that's the difference.
Right, right. So Fred, the examples that you gave, I would say that you have this amazing gift of making dense insurance language understandable to everyone. So whatever you're putting on the table right now, being a person from not a very non-insurance kind of an industry, the kind of things you're putting it simply for a layman to understand. So I think that's also one of the struggle, the communication struggle that many of the leaders face. So, what advice would you like to give to brokers and leaders who struggle with communicating their message clearly,
Well,
especially when the stakes are high?
it's two parts. Two parts.
Hmm.
From the consumer's perspective, yeah, you're going to have to educate yourself a little bit.
Right.
No question about it. But there's a wonderful book. Have you heard of the Such and Such for Dummies, brand? They publish a lot of books like, how to repair your car for dummies, how to do this for dummies. There's actually a very good version of it for how to buy insurance for dummies, and you can buy it on Amazon. I'm coming out with a
Hmm.
new book soon called, guess what? The Gotchas That'll Get You. And I'm going to go over
Wonderful.
all the little problems and policies that you need to keep your eyes out for. Whether it's
Wonderful.
homeowners or personal lines auto, you'd be surprised with it that there are gotchas in those policies as well. So yeah, the
Mm,
consumer has to spend a little more time, but do not buy on price because you don't know
mm,
what you're giving up. And people are trained to think every policy is the same. There's no difference between the Allstate homeowner policy and somebody else's homeowner policy, and that's not true. They're not
right,
true.
right.
I mean, yes, insurance is heavily regulated, but what the departments of insurance do in various states is they set forth minimums. Here's coverage you have to offer, and then they're
Mm,
free to do whatever else they want. So
right,
what's really the difference? And you'd be surprised at what the differences could be. And you don't find out whether you've got a good policy or not until you submit a claim. And that's not when you want a surprise.
right.
From a brokerage standpoint, work with your
Mm-hmm.
customer.
Right.
You've got all when you're selling insurance, even for as little as 5 years, you know more about the policies you're selling than the person you're buying, selling to will ever know. Use that
Mm,
knowledge.
right.
It'll avoid a lawsuit, cement a relationship, but never buy on price. And unfortunately, we're all programmed to that. I mean, all the television ads you see are just flooded with, oh, I just saved $500 moving my insurance to Allstate, or from this company to that company. I just saved $300 on my homeowner insurance. Blah 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 blah. And then there's the placebo effect. Your insurance broker says, "Here you go. I just saved you $400, and here's your policy. Don't you feel good, right?" Until you have a claim and you find out you're
Mm,
$300,000 underinsured on your fire loss. Now tell me
right,
how happy you are. And then they
right.
want to blame their agent. Say, oh, yeah, we got that order taker standard of care to
Mm,
deal with. You can make your broker work with you. You can put it in writing. You have to be specific. You can't say, I want the broadest coverage and I want the best coverage. What the heck does that mean? It has no meaning. Frankly, it has no meaning at all. But if you
mm,
say, I want to sit down with you and I want you to go over my coverage, I want to go over what my options are. That's a different
right,
story. And if they
right.
won't do it, find somebody who will.
Mm. Okay. So, Fred, switching gears for a moment, you studied cooking in France, written a
Well,
cookbook, and still savor that passion. Has cooking taught you anything about leadership, discipline, or resilience that applies to your professional world even today?
well, don't do anything new without testing it first.
That's actually a really great message. And I think that applies to every industry. That applies to everyone.
In my youth, um, I used to throw an annual party every year and
Um,
try stuffing 60 people into a one bedroom apartment, kind of thing. I mean, it was bad. I was famous for this, but I did all the cooking for 3 days. And then
right.
one thing led to another, and I was very seriously involved with this woman. We were living together, and she had a little bit of a bigger place, but it was time to do the annual party. And I decided I'm going to make crab rangoon, which is like wonton stuffed with crab and cream cheese. And I must have spent an hour and a half or so, rolling out you making the filling and then making the wontons. But I didn't
Mm-hmm.
know when you got to put them in the refrigerator, obviously, until you're ready to cook them. But I didn't know you had to keep them separated.
Okay.
I
Hmm.
just kept putting them in this big bowl on top of each
Hmm.
other. So we're
Hmm.
getting close to that kickoff time for the party, and I thought, well, I guess I should start frying up the wontons. And I pulled out the bowl. It was just one big melted mess. It was just what the idea of maybe scooping it out and making little balls and frying it didn't occur to me. That might have worked actually,
Right.
but I
Hmm.
didn't. I said, I don't know what to do with this. I was
Hmm.
like, and my girlfriend at the time was looking at me, what are you going to do? I said, that's simple.
Hmm.
I'm going to trash it. And we got enough other food that, okay, so we have two different chafing dishes and they'll have the same thing in them. Nobody's going to know that we had this disaster except you and me.
Right.
And that's what we did. And everybody had a great
Mm.
time with another, smash hit. I did all the cooking, had wonderful desserts and all this. And, I was totally exhausted at the end of that one. But but nobody knew that this disaster had happened. And all because I didn't check it out first.
Right, right. That's a good part. So, Fred, after everything, the business you've built, the minds you've mentored, the policies you've written, what do you hope the next generation of leaders in your industry don't do? That's the what not to do question for you. And also what's one mindset shift or a principle you would want them to hold on to as they navigate their paths?
Well, I think there are more and more people that think like I do. God, that may not necessarily be a good thing, but no, there are a lot of people I'm meeting on LinkedIn and other places that do care about uh, providing the coverage and providing the financial security.
Mm-hmm.
And there's always going to be people who don't care. I just want to make money. I just want to make money, and
Right.
you're never going to get away from that.
Mm.
But there are a lot of people out there that want to provide the financial security. And I think more and more of them are going to be very successful and become leaders themselves. And as long as we keep training people to think like that, they'll be out there. But the consumer's got to wise up. You got to wise up a little
Right.
more. Because one thing's for certain, when you got 37 states following the order taker standard of care, you got no choice.
Right.
You got to wise up. Take the time. Insurance, most people hate buying it. They're glad when they have it, and then they find out they really don't. That,
Right.
that's that's just wrong.
Right.
And like I said, there are a lot of lawyers out there that are writing articles and getting clients saying we're going to help, we're going to help you avoid paying claims. What
Mm-hmm.
kind of thing is that? And that's just plain wrong.
Right.
I believe in doing the
Absolutely.
right thing, or as my wife would
Mm-hmm.
say, I'd rather be wrong than right. I'd rather be right than wrong. Well, I can tell you, or right than rich, is what she says. I'd rather be right than rich. Well, I can tell you, we've been right a lot. We've been right an awful lot.
Yes, that's a great piece of advice. It's almost time and we need to wrap up. So, Fred, thank you so much for joining us today. Thank
My
you for sharing
pleasure.
your wisdom, the stories, and of course, the heart behind your leadership journey. To our listeners who, I hope you've enjoyed the episode. Be sure to subscribe and leave us a review. Until next time, keep leading with courage, learn from what not to do, and keep the conversations going. Thank you so much.
Thank you. Thanks for having me.